So in this video, I've got details of a new account paying 1.5%, easily making it the new best buy in terms of easy access savings. I've also got information about some other changes that you might be worth knowing about. Are they good? Are they bad for banks like Natwest and Santander for their savings accounts? I'll give you a roundup of what's available generally for your accounts, plus my top picks of where to put your money, depending on how much money you've got over it now or as you're going to be putting it away month on month. So let's start off with this new account, and this is from Chase Bank. Chase Bank is set up by JP Morgan Chase from America, one of the big guys over there. They launched their current account here last September, which overall is a pretty decent option. I've talked about it a lot in my current account updates, and I've got a whole review of that current account you can check out from last year. 1% cash back on most of your purchases, making it my top card for spending at home. It's also fee-free to use abroad, so it's my top card now, thanks to that cash back to use overseas. There's also 5% interest on roundups, which aren't going to be like a huge balance, but it's worth turning that feature on to get that rate on smaller amounts of money. There are other things I quite like about it, so it's budgeting features and stuff. So generally, it's a good kind of product for you as a current account. What they've added in this week, right at the end of March, is savings accounts which pay 1.5%. Now, you can have up to 10 of these if you want to. You can have one if you want, or 2, 3, 4, 5, 6, 7, 8, 9, 10. And the balance you can have across all of those, combined total across those 10 accounts, is £250,000. So that is effectively, you know, a massive amount of money. It's very, very rare that anyone's going to have a lot more than that money to go into this single account. And in fact, if you remember the fact that the Financial Services Compensation Scheme only pays out 85k if a bank goes under, really, you don't want to have more than 85k in any bank. So yes, there's 250k limit, but really you don't want more than 85k. And practically, that's a lot of money to have in savings as well. You'll be losing your value against inflation quite heavily there if you kept all of it in cash savings. Even one paying 1.5%, which is better than the rest, really have a lot less than that. But that's how it works. So why are there 10 different accounts? Why would you use that? Well, it's a kind of nice little way to actually sort of segregate out your different savings pots for different purposes, rather than just having, here's all my money, and this is where my emergency fund is, alongside the stuff I'm saving for a holiday or a new car or my wedding or whatever it is. All together, you can break it out into individual pots. That means that you're much easier for you to keep track of exactly what you've got for each of those different reasons, those different sort of targets, I guess, for your savings. You can name them. You can give each pot a name. And you can also put a total in there that you're aiming for, so you can track the progress that way as well. So let's say it's a holiday, you want to save £1,000. Right now, you've got £400 in there. You can see that. You've got 400 quid. You need to put another 600 in there. And that hopefully might keep you a bit more motivated to put money into those that particular account. And again, you might have an emergency savings one. Loads of different reasons you can sort of break them out. So I really like that feature as well. Each one, as you normally get with a savings account, will have its own sort code and account number. However, you can't use the Chase debit card to pay straight out of those savings accounts. You will have to transfer that money from the savings account into one of your other Chase accounts and then pay from it that way, or again, transfer it out again into a different bank if that's how you want to operate it. This is really good. So let's look at how this compares to the other accounts. I told you last month about the Virgin Money M Saver account paying 1% on balances up to 25k. And that was kind of fantastic compared to what we'd had over the previous few months, the previous year. This is adding 50% on top. So if you have put your money in a Virgin M Saver in the last month on the basis of that paying 1%, depending on how much you've got saved, I absolutely would consider moving that money over, that extra money over into the Chase Bank account, because you're going to get, 50% more interest if you do that. I would keep, if you have that, obviously to have that Virgin account, you do have to have the Virgin M Plus current account in the first place. And I would keep £1,000 in there because that pays 2.02% on that grand. So it makes sense to keep your money in there. And we'll come to the other options in a moment soon. But otherwise, absolutely move your money across. The next best one after this is 0.9% from Atom. Again, that would have been really good just sort of 4 or 5 weeks ago. But unfortunately now, it's right near the top, but not at the top. And this big jump we've seen to 1.5% from Chase really means all the other accounts are kind of really not fantastic at all. Now, why is this happening? Why are they doing this? Well, Chase obviously want to attract more customers. They're aware that some people with that cashback account, that's only for 12 months. They might be halfway through that, more than halfway through. How do you get them to stick with it? How do you get them to use Chase as the main bank? So this is partially about a marketing push. It's partially also going to be a reaction to rates increasing elsewhere. As I did a video the other week, you can check that out if you haven't seen it already, looking at the most recent Bank of England base rate increase. We've gone from 0.5% to 0.75%. It's the third increase in a row. We were at 0.1% at the start of December last year. So in just 4 months, we've seen quite a marked increase in rates. Still relatively low compared to history, but for the last few years, particularly, it's quite a lot, and those increases in a row have been quite a lot. So we have seen each of those little increases start to push along in the rest of the market as well. And I think there's a combination of that, why we're getting 0.9% from Atom Bank. Partly that was in reaction to Virgin Money, partly that was in reaction to interest rates rising. So I wouldn't be surprised that when I come to this update next month, we might see more accounts pushing above that 1% rate, but it might take a while for them to jump up to 1.5. So really right now, there is no other competitor for large amounts of cash. So the question is, what does this mean for premium bonds as well? Well, as you've seen, if you've watched my other videos on premium bonds, I've been a big fan of them for a while, but last month with that Virgin Money increase, it became a bit more touch and go because yes, there was a chance I'd get more money back in prizes from premium bonds than I'd get from that 1% in Virgin Money. It was never guaranteed. So I was kind of unsure what I was going to do. I kind of thought, wait and see. And actually probably what I do is wait until the prize draw that happens at the start of April before I made that call. However, now that you can get a guaranteed 1.5% from Chase Bank, that far exceeds what I'm likely to get from premium bonds. Even if I'm like a little bit more than average luck, I'm still unlikely to get 1.5%. And chances of me getting a big prize are so low that really I'm not missing out at all. So I would say, wait until that first prize draw that takes place at the start of April, and then potentially consider moving your money out. Take it out of premium bonds, withdraw it all, or whack it into Chase or one of the other options. Much more better, I think, for you to get a guaranteed return. Of course, if premium bonds do change their prize rate at some point, which they might do, then maybe you want to move it back again. But for now, the Chase Bank one is definitely the best bet. Now, when it comes to saving on a more monthly basis, I've got an update here for you on a change to the Natwest and RBS digital regular saver accounts. Now, these have been at the top in terms of how much interest you can earn, the top of the lists since they launched, which was 15, 16 months ago, a good long time ago they launched, 3.04%. However, the catch was, there were two catches on launch. One, you could only save £50 a month. And the second one was you only get that interest on the first £1,000 you have saved. So yes, it was great to have, but it wasn't worth opening up a NatWest or an RBS current account necessarily just to get hold of it, because you weren't talking about a huge amount of money, just 50 quid a month. Well, there has been a change because now the most you can put in every single month is £150. That means it's going to take you 7 months in order to get to £1,000. And also, unlike other regular savers, after a year, it doesn't close. It will keep going. Obviously, they could change their mind. They could close the account down for everyone at some point. But right now, have that money in and then keep up. When you get to £1,000, just stop paying into it. And it'll continue earning right now 3.04%, which is fantastic. And the fact that you can get there now much faster in 7 months rather than previously it would have been, a year and a half or something, is a big bonus. Plus, right now, and I talk about this a lot when I do my bank updates, there are bank switching incentives to get you to open up and move in a new account to RBS or NatWest, 150 quid. Now, you can only get that bank switching offer from one of the two banks. So long as you haven't already got cash from one of those two since, I think it's 2019, double check that in the terms and conditions. You can open up a new account with them, switch into it, an old bank into that, get that 150 quid, open up that regular saver, start saving into it. So you're getting even more cash. And in fact, if you have already got one of NatWest or RBS, and you've already had the switching offer, you might be tempted to open up an account with one of the other bank. So I've got a NatWest one. I was very close to £1,000 before this rule changed. I've actually now topped that up, so I'm now at £1,000. I won't put any more money into that account. I'll be earning that 3.04% on that £1,000 for the next year, unless things change. I could, if I wanted to, open up an RBS current account and start it all over again. It's up to you whether you want to bother with that, whether you've got too many accounts, but certainly it's a lot better, much more attractive now. You can put 150 a month in. We'll come back to other regular savers in a second. The other kind of big one to tell you about here is around Santander, because lots of banks are doing this. They're increasing their rates. Most of the time, it's still well off what you can get elsewhere in those top accounts I'm telling you about. But the Santander 1231 is interesting because This is kind of where a lot of people would kind of, what do I get? The Santander 123 account or the Santander 123 Lite account? Both of them give you cash back on your bills, which is really important right now if you want to try and get a little bit back, eke a little bit back from the rising costs you're getting. So it's well worth having your energy, your council tax, your broadband, if you've got paid TV, your mobile phone coming out of a Santander account. But the interest is only available on the full 123 account. It was until the start of March paying 0.3%. It said following those interest rate increases, they've increased it, but only to 0.5%. Now, considering the 123 fee is twice that of the 123 Lite, it does not make any sense. Not, excluding the fact that you can get better interest elsewhere. These accounts we've already mentioned. It makes no sense to have a 123 and change up from a 123 Lite. Stick with that 123 Lite account. The extra interest is absolutely pointless. You will not get it back from that for that extra £2 a month fee on top of what you'd get just for the cash back. Now, over on my blog, becleveryourcash.com, and I'll link to it in the notes below the video, I have got my best buys table, which I'm updating on a daily basis. As soon as there's a change there, I'm letting you know about the highest accounts. If more things come along before my next video update, then that is the place that you'll find them. But let me quickly give you a kind of rundown of where I think you should be saving your money right now in April 2022. And if you listen to the rest of this video so far, you won't be surprised by most of it. The number one account for your money, if you have up to £1,000, is the Virgin Money M Plus current account. Of course, as I said, you could have more than one of these potentially if you've got them in the past, so maybe you've got more money there. If you're starting off from scratch, only one, but you could get a joint account and your partner can get one for themselves as well, so that'd be 3 accounts between you. That is the best one you're going to get. If you have an Apple phone, so an iOS phone, you can also put £3,000 away and get up to, get 2% on the Claro app. Again, it is iOS only. It's not technically completely easy access. It might take a day or two for you to get the money out, but that is definitely one to kind of consider, again, really boosting up how much you are going to earn. Beyond that, it's Chase Bank. So if you've got, whether it's 1, 2, 3, 4 or £5,000 in those combination of Claro and Virgin Money current accounts, after that, put the rest of it into Chase Bank. On the whole, I do have one caveat there. Chase Bank is, as I mentioned, part of JP Morgan Chase, one of the biggest banks in the world, and not particularly a strong one when it comes to ethics. If this is something you're worried about, if you do not want your savings, particularly larger sums, being put towards lending to oil companies or to arms trade companies or to tobacco companies, anything like that, those things that you're worried about, then you probably do want to stay clear of Chase Bank. In fact, most of those banks you want to stay clear from, but particularly Chase is not going to be a great one. Where do you put your money instead? Well, you could look at any building society. Again, that article I've got over on the blog will take you through the best ones right now. There could be easy access, it could be a fix, it could be a regular saver. You're probably looking, in fact, you're almost definitely looking at a slightly lower rate, but you can be assured with building societies that your money is only going towards lending towards homes. It's not going to any of those other things you might not agree with. Or you could look at Tandem. They say they're putting their money into sort of green initiatives. They're paying 0.85% right now on easy access. Nationwide, again, it's a building society that has a triple access account paying 0.7%. So they are some of your alternative options. But again, check out the article for the best ones for you. Last top tip here for you here is about regular savings. Now, we talked about that Natwest and RBS one. Obviously, they're my top picks. But if you want to save more than that afterwards, so you've got current accounts with those, you're putting up to 300 quid in both of those, you want to save more, then you can also put £200 into the Nationwide Flex regular saver. Again, you have to have a current account with Nationwide to get this, but you get 2.5%. So that's potentially 500 quid. If you can save that every single month, appreciate with higher running costs right now, that's going to be harder, then they're the ones to go for. My name is Andy Webb. Thank you so much for watching. If you want to watch more videos about savings accounts, then check out these videos here.